The year is 2008. The world is in financial chaos. Lehman Brothers has collapsed, sending shockwaves through global markets. Millions of people are losing their homes, their jobs, their life savings. Trust in traditional banking systems has never been lower. In the midst of this economic devastation, a mysterious figure using the pseudonym Satoshi Nakamoto publishes a white paper that will change the world forever. But this isn't just the story of Bitcoin's creation. This is the untold story of the first Bitcoin millionaires, the visionaries and risk-takers who saw something revolutionary in lines of code when everyone else saw only digital fairy dust. These are the people who bought pizza with Bitcoin, who mined coins on their laptops, who held on when everyone said they were crazy. Some became incredibly wealthy. Others lost fortunes. All of them changed the world. Our story begins in a small apartment in Jacksonville, Florida, where a programmer named Laszlo Hanyecz is about to make what might be the most expensive food purchase in human history. It's May 22, 2010. Laszlo is hungry for pizza, but he's also fascinated by this new digital currency called Bitcoin that's been circulating among cryptography enthusiasts. He decides to conduct an experiment. He posts on the Bitcoin forum, offering 10,000 Bitcoins for 2 large pizzas. The post seems almost comically casual given what we know now. "I'll pay 10,000 Bitcoins for a couple of pizzas," he writes. "Like maybe 2 large ones so I have some left over for the next day. I like having leftover pizza to nibble on later. You can make the pizza yourself and bring it to my house or order it for me from a delivery place." A 19-year-old college student named Jeremy Sturdivant, who goes by the handle Jerkos online, takes him up on the offer. Jeremy orders 2 Papa John's pizzas and has them delivered to Laszlo's address. In return, Laszlo sends him 10,000 Bitcoins. At the time, those Bitcoins are worth about $40. It's the first documented commercial transaction using Bitcoin, and it establishes a price of roughly 4 Bitcoins per penny. Laszlo doesn't realize it yet, but he's just spent what will eventually be worth over $600 million on pizza. Jeremy, meanwhile, has just become one of the first people to receive Bitcoin in exchange for goods and services. Neither of them could have imagined that this simple transaction would become legendary, that May 22nd would eventually be celebrated worldwide as Bitcoin Pizza Day. But Laszlo isn't just making history with pizza. He's also one of the first people to successfully mine Bitcoin using a graphics processing unit, or GPU. Before Laszlo, people were mining Bitcoin using their computer's central processing unit, or CPU, which was slow and inefficient. Laszlo realizes that graphics cards, originally designed to render video game graphics, can perform the mathematical calculations required for Bitcoin mining much more efficiently. His innovation changes everything. Laszlo is mining thousands of Bitcoin every day using his GPU setup. He estimates that he mined over 100,000 Bitcoins during his active mining period. If he had held onto all of them, he would eventually have been worth billions of dollars. But Laszlo is a programmer, not an investor. He views Bitcoin as an interesting technical experiment, not as a store of value. He spends his Bitcoins freely, including those famous pizza purchases. Years later, when Bitcoin reaches tens of thousands of dollars per coin, people will ask Laszlo if he regrets spending so much Bitcoin on pizza. His response is remarkably philosophical. "I think that it was worth it," he says. "I did my part in Bitcoin's early development by using Bitcoin, which is what it was designed for. I'm not bothered by it. The pizza was good." Laszlo represents something important about the early Bitcoin community. These weren't people trying to get rich quick. They were idealists, technologists, and experimenters who believed in the potential of decentralized digital money. The fact that some of them became incredibly wealthy was almost accidental. Meanwhile, on the other side of the country, a young programmer named Gavin Andresen is also getting interested in Bitcoin. Gavin is working as a software developer in Amherst, Massachusetts, when he first encounters Bitcoin in 2010. Like many programmers, he's initially skeptical. Digital money has been tried before, and it's always failed. But as he reads the technical specifications and examines the code, he begins to understand that Bitcoin is different. Gavin starts contributing to Bitcoin's development, helping to improve the software and fix bugs. His contributions catch the attention of Satoshi Nakamoto himself, who begins corresponding with Gavin directly. As Satoshi gradually withdraws from active participation in Bitcoin development, he hands over increasing responsibility to Gavin. In April 2011, in what will prove to be one of his final public communications, Satoshi sends Gavin a message that changes everything. "I've moved on to other things," Satoshi writes. It's in good hands with Gavin and everyone. With that, the mysterious creator of Bitcoin disappears, leaving Gavin as the lead maintainer of the Bitcoin software. But before his disappearance, Satoshi has transferred significant control of the Bitcoin project to Gavin. This includes access to certain Bitcoin addresses and the responsibility for managing Bitcoin's development. While the exact amount of Bitcoin that Gavin received or had access to isn't publicly known, his central role in Bitcoin's early development puts him in a unique position. Gavin becomes one of the first people to really understand Bitcoin's potential value. Unlike many early adopters who see Bitcoin as an interesting technical project, Gavin begins to view it as something that could revolutionize the global financial system. He starts accumulating Bitcoins, both through direct purchase and through his work on the project. Gavin also becomes one of Bitcoin's most important evangelists. He gives talks at conferences, writes articles explaining how Bitcoin works, and works tirelessly to improve the technology. His efforts help Bitcoin gain legitimacy in the eyes of both developers and early adopters. By 2013, when Bitcoin's price first exceeds 1,000, Gavin's early accumulation and continued involvement in the project have made him quite wealthy. But like many early Bitcoin adopters, Gavin doesn't just hodl his Bitcoins. He continues to spend them, donate them, and use them to fund Bitcoin development projects. Gavin's story illustrates another common theme among early Bitcoin millionaires. Many of them were driven more by ideological conviction than by profit motive. They believed that Bitcoin could create a more fair and open financial system, and their wealth was a byproduct of their commitment to that vision. While programmers like Laszlo and Gavin were making Bitcoin work, entrepreneurs were beginning to see its commercial potential. One of the most important early Bitcoin businesses was Mt. Gox, a Bitcoin exchange founded by a French programmer named Jed McCaleb. Jed originally creates Mt. Gox as a trading card exchange for the game Magic, the Gathering, hence the name Magic, the Gathering online exchange. But as Bitcoin gains popularity, Jed realizes there's a need for a place where people can easily buy and sell Bitcoins for traditional currency. In July 2010, he converts Mt. Gox into a Bitcoin exchange. The timing is perfect. Bitcoin is starting to gain attention beyond the cryptography community, but there are very few easy ways to buy Bitcoins. Mt. Gox fills this gap, becoming the first major Bitcoin exchange. Almost immediately, it starts processing significant volume. But Jed isn't interested in running an exchange long-term. In March 2011, he sells Mt. Gox to Mark Carplys, a French programmer living in Japan, for what many consider to be a relatively small amount. The exact terms of the sale aren't publicly disclosed, but it's believed that Jed receives some combination of cash and Bitcoin. This sale turns out to be one of the best timed exits in Bitcoin history. Jed has created and sold a business that will soon become the dominant Bitcoin exchange, handling over 70% of all Bitcoin transactions at its peak. If he had held on to Mt. Gox, he might have become even wealthier, but he also would have been responsible for one of the biggest disasters in Bitcoin history when Mt. Gox eventually collapses in 2014 amid allegations of fraud and mismanagement. Instead, Jed uses his proceeds from the Mt. Gox sale to fund his next venture. He has an idea for a new kind of digital currency system, one that's designed specifically for financial institutions rather than individual users. This project will eventually become Ripple, and Jed's early stake in Ripple will make him a billionaire. But Jed's story also shows how many early Bitcoin fortunes were made not just by holding Bitcoin, but by building the infrastructure that makes Bitcoin useful. Exchanges, wallet services, payment processors, mining companies, all of these businesses were created by entrepreneurs who saw opportunities in Bitcoin's growing ecosystem. Another early Bitcoin entrepreneur is Charlie Shrem, a 22-year-old college student from Brooklyn who starts a Bitcoin exchange called BitInstant in 2011. Charlie's background is unusual for a Bitcoin entrepreneur. He's not a programmer or a cryptography expert. He's studying business at Brooklyn College and working at his family's electronics store when he first learns about Bitcoin. Charlie's introduction to Bitcoin comes through reading about it online. Like many people, his first reaction is skeptical. Digital money sounds like science fiction. But as he learns more about how Bitcoin works, he begins to see its potential. More importantly, he sees a business opportunity. At the time, buying bitcoins is extremely difficult for ordinary people. The process typically involves wire transfers to obscure money exchange services, waiting days for transactions to clear, and navigating complex verification procedures. Charlie realizes that if someone could make buying bitcoins as easy as buying anything else online, they could build a significant business. Bitinstant aims to solve this problem by allowing people to buy bitcoins using cash at retail locations. Customers can go to participating stores, give cash to the cashier, and receive bitcoins in their digital wallet within minutes. It's a simple concept, but it makes Bitcoin accessible to a much broader audience. The business takes off quickly. Within months of launching, Bitinstant is processing thousands of transactions per day. Charlie raises money from investors, including the Winklevoss twins, who invest $1.5 million in the company. At its peak, Bitinstant is processing approximately 30% of all Bitcoin transactions. Charlie's success makes him wealthy very quickly. He's earning money from Bitinstant's transaction fees, and he's also accumulating Bitcoins as part of his business operations. As Bitcoin's price rises from single digits to over 100, Charlie's net worth grows dramatically. But Charlie's story also illustrates the risks that many early Bitcoin entrepreneurs faced. In 2014, he's arrested on charges related to money laundering and operating an unlicensed money transmitting business. The charges stem from allegations that Bitinstant was used to facilitate transactions on Silk Road, an online marketplace that sold illegal drugs. Charlie eventually pleads guilty to reduced charges and serves time in federal prison. His experience shows how the regulatory uncertainty surrounding Bitcoin in its early years created significant legal risks for entrepreneurs trying to build businesses in the space. However, Charlie's early accumulation of Bitcoins means that even after his legal troubles, he remains wealthy as Bitcoin's price continues to rise. His story is a reminder that many early Bitcoin fortunes came with significant personal and professional costs. While entrepreneurs like Charlie were building businesses, other early Bitcoin adopters were approaching it as an investment opportunity. One of the most successful early Bitcoin investors is Roger Ver, who becomes known in the Bitcoin community as Bitcoin Jesus for his evangelical promotion of the cryptocurrency. Roger's path to Bitcoin wealth begins with his success as a traditional entrepreneur. In the 1990s, he starts a company called Memory Dealers that sells computer memory and networking equipment. The business is successful, and by his early 30s, Roger has accumulated significant wealth from his e-commerce operations. Roger first learns about Bitcoin in early 2011 when it's trading for less than $1 per coin. His initial reaction is enthusiastic. As a libertarian who's long been skeptical of government control over money, Roger immediately grasps Bitcoin's potential to create a financial system outside of traditional government oversight. But Roger doesn't just buy Bitcoins. He goes all in on the Bitcoin ecosystem. He starts investing in Bitcoin companies, funding startups that are building Bitcoin infrastructure. His investments include Bitinstant, Blockchain, Info, BitPay, Kraken, and dozens of other Bitcoin-related businesses. Roger also becomes one of Bitcoin's most prominent advocates. He gives talks at conferences around the world, explaining Bitcoin's benefits and trying to convince others to adopt it. He creates websites promoting Bitcoin adoption and sponsors Bitcoin-related events. His enthusiasm earns him the nickname Bitcoin Jesus, and he becomes one of the most recognizable faces in the Bitcoin community. Roger's investment strategy pays off spectacularly. He reportedly spends over $1 million buying Bitcoins when they're trading for less than $1 each. As Bitcoin's price rises first to 10, then 100, then over the 100,000, Roger's holdings become worth tens of millions of dollars. But Roger's wealth doesn't just come from holding Bitcoins. His early investments in Bitcoin companies also pay off as the Bitcoin ecosystem grows. Companies like BitPay and Blockchain, Info become major players in the Bitcoin industry, and Roger's early stakes in these companies become extremely valuable. Roger's story illustrates another path to Bitcoin wealth that many early adopters took. Instead of just buying and holding Bitcoins, they invested in the entire Bitcoin ecosystem. This strategy often proved even more lucrative than just holding Bitcoins, because successful Bitcoin companies could grow even faster than Bitcoin's price. However, Roger's story also shows how early Bitcoin wealth sometimes came with controversy. In later years, Roger becomes a controversial figure in the Bitcoin community due to his support for Bitcoin Cash, a variant of Bitcoin that splits off from the main Bitcoin network in 2017. This controversy shows how the early Bitcoin community, despite creating enormous wealth for many participants, was also marked by intense ideological disagreements about Bitcoin's future direction. While Roger Ver was investing in Bitcoin companies in California, a computer science student named Eric Finman was making his own Bitcoin bet in Idaho. Eric's story is remarkable because he's just 12 years old when he first buys Bitcoin in 2011. Eric's introduction to Bitcoin comes through his older brother Scott, who's working in Silicon Valley and following developments in cryptocurrency. Scott explains Bitcoin to Eric, who immediately becomes fascinated by the concept of digital money that operates outside the traditional banking system. Eric receives 1,000 as a gift from his grandmother and decides to invest it all in Bitcoin. At the time, Bitcoin is trading for approximately 10 per coin, so Eric's 1,000 investment gets him about 100 Bitcoins. His family thinks he's crazy for investing in something so speculative, but Eric is convinced that Bitcoin represents the future of money. Eric's investment timing is nearly perfect. Over the next few years, Bitcoin's price rises dramatically. By 2013, when Bitcoin first exceeds 1,000 per coin, Eric's initial 1,000 investment is worth over 100,000. He's 15 years old and already has more money than many adults. But Eric doesn't just hold his Bitcoins. He uses some of them to start a business. In 2014, he sells some of his Bitcoin holdings to fund Botangle, an online tutoring platform that connects students with tutors. The business operates for several years and eventually gets acquired, providing Eric with additional income on top of his Bitcoin gains. Eric's story captures the imagination of the media because of his young age and his remarkable success. He appears on television shows and gives interviews about his Bitcoin investments. His story becomes symbolic of Bitcoin's potential to create life-changing wealth for ordinary people. By 2017, when Bitcoin's price reaches nearly 20,000, Eric's original investment is worth close to $2 million. At age 18, he's a millionaire several times over, all because of a cryptocurrency investment he made when he was 12 years old. Eric's success also highlights how early Bitcoin adoption often required a combination of luck and conviction. Eric was lucky to learn about Bitcoin when he was young and the price was low. But he also showed remarkable conviction in holding on to his Bitcoins through years of volatility and skepticism from others. Eric's story inspires many other young people to invest in Bitcoin, though few achieve his level of success. His experience shows how Bitcoin created opportunities for wealth creation that were accessible to anyone with internet access and the willingness to take risks, regardless of their age or background. The stories of individual Bitcoin millionaires are fascinating, but they're part of a larger phenomenon that was happening in the early 2010s. Bitcoin was creating an entirely new asset class, and people who understood its potential early had opportunities to accumulate wealth at a scale that had rarely been seen in human history. One group that particularly benefited from early Bitcoin adoption was the cryptocurrency mining community. In Bitcoin's early days, mining was something that anyone could do from their home computer. The mining algorithm was designed to automatically adjust its difficulty based on how much computing power was being used to mine Bitcoins, which meant that when fewer people were mining, it was easier to find new Bitcoins. Many early miners became wealthy almost by accident. They would set up mining operations as a hobby or technical experiment, then find themselves accumulating thousands of Bitcoins without fully realizing their potential value. One such person is a programmer who goes by the pseudonym Art4s on Bitcoin forums. Art4s is one of the first people to build a large-scale Bitcoin mining operation using graphics processing units. In 2010 and 2011, his mining farm generates thousands of Bitcoins per month. While the exact size of his Bitcoin holdings isn't known, estimates suggest he accumulated tens of thousands of Bitcoins during the early mining boom. Art4s represents a common archetype among early Bitcoin millionaires, the accidental investor. These were people who got involved in Bitcoin for technical or ideological reasons, not because they were trying to get rich. Their wealth was a byproduct of their early participation in the Bitcoin network. Another early miner who became wealthy is a college student named Christopher Koch from Norway. In 2009, Christopher is writing his thesis on encryption when he learns about Bitcoin. Curious about the technology, he decides to buy some bitcoins as part of his research. He spends 150 Norwegian kroner, approximately 27, to buy 5,000 bitcoins. After making the purchase, Christopher essentially forgets about his bitcoins. He finishes his thesis, graduates from college, and moves on with his life. The bitcoins sit untouched in his digital wallet for 4 years. In 2013, Bitcoin starts getting significant media attention as its price rises above 100. Christopher suddenly remembers his old Bitcoin investment and tries to access his wallet. After some difficulty recovering his password, he's able to access his 5,000 Bitcoins, which are now worth approximately 500,000. Christopher's story becomes a media sensation because it captures something magical about Bitcoin's early days. Here's someone who made a tiny speculative investment, forgot about it completely, and then discovered years later that he had accidentally become wealthy. Christopher uses some of his Bitcoin gains to buy an apartment in Oslo, making him one of the first people to purchase real estate with Bitcoin profits. His story inspires many people to check old computers and hard drives, hoping to find forgotten Bitcoin wallets containing forgotten fortunes. The phenomenon of forgotten Bitcoin wallets highlights another unique aspect of early Bitcoin wealth creation. Unlike traditional investments, where forgetting about your holdings might mean missing dividend payments or annual statements, Bitcoin wallets could sit completely untouched for years while accumulating value. This created a situation where some of the biggest Bitcoin gains went to people who were either incredibly patient or incredibly forgetful. The people who obsessively tracked Bitcoin's price and tried to time the market often did worse than those who bought early and then ignored their holdings. As Bitcoin's price continued to rise through 2012 and 2013, more sophisticated investors began to take notice. One of the most prominent early institutional Bitcoin investors is Barry Silbert, who starts accumulating Bitcoins through his investment firm Digital Currency Group. Barry's background is in traditional finance. He's worked as an investment banker and has experience with early-stage technology investing. When he first learns about Bitcoin in 2012, his initial reaction is skeptical. The technology seems complex, the regulatory environment is uncertain, and the price is extremely volatile. But as Barry studies Bitcoin more deeply, he begins to understand its potential. He realizes that Bitcoin represents a fundamental innovation in computer science and economics. More importantly, he sees that if Bitcoin succeeds in becoming a widely used digital currency, its current price represents a massive undervaluation. Barry starts buying Bitcoins personally and also begins raising money from other investors to buy more. His investment firm, Second Market, launches one of the first Bitcoin investment funds, allowing accredited investors to gain exposure to Bitcoin through a traditional investment vehicle. Barry's strategy is different from many individual Bitcoin adopters. Instead of just buying and holding Bitcoins, he focuses on building a diversified portfolio of Bitcoin-related investments. His firm invests in Bitcoin exchanges, wallet providers, payment processors, and other companies building Bitcoin infrastructure. This strategy proves extremely successful. As Bitcoin's price rises and the Bitcoin ecosystem grows, Barry's investments increase in value dramatically. By 2017, his firm's Bitcoin-related investments are worth hundreds of millions of dollars. Barry's success helps legitimize Bitcoin in the eyes of traditional investors. His background in conventional finance gives him credibility with institutional investors who might otherwise be skeptical of cryptocurrency. His investment fund becomes a model that many other financial firms later copy. Barry's story also shows how Bitcoin wealth creation evolved over time. While early adopters like Laszlo and Eric made money by buying Bitcoins directly, later investors like Barry made money by building diversified cryptocurrency investment portfolios. This evolution reflects Bitcoin's growing maturity as an asset class. Another sophisticated early Bitcoin investor is the Winklevoss twins, Cameron and Tyler, who become famous for their legal battle with Mark Zuckerberg over Facebook's founding. The twins use part of their settlement from that lawsuit to make one of the largest early Bitcoin investments. The Winklevoss twins first learn about Bitcoin in 2012 during a vacation in Ibiza. They meet Charlie Shrem at a beach party, and he explains Bitcoin's technology and potential to them. Initially skeptical, they become more interested as they learn more about Bitcoin's properties. The twins decide to make a significant investment in Bitcoin, reportedly spending $11 million to buy bitcoins when the price is around 120 per coin. This gives them approximately 91,000 bitcoins, making them one of the largest individual holders of Bitcoin at the time. But the Winklevoss twins don't just buy and hold Bitcoins. They also become active in building Bitcoin infrastructure. They invest in BitInstant and several other Bitcoin companies. They also work on launching a Bitcoin exchange, traded fund that would allow mainstream investors to buy Bitcoin through traditional brokerage accounts. The twins' investment strategy reflects their belief that Bitcoin will eventually become a mainstream asset class comparable to gold. They often describe Bitcoin as digital gold and argue that it has properties that make it superior to traditional store of value assets. Their conviction is tested during Bitcoin's volatile periods. The price drops significantly several times after their initial purchase, leading some people to question their investment thesis. But the twins continue to hold their Bitcoins and even buy more during price declines. Their patience is rewarded spectacularly. By 2017, when Bitcoin's price reaches nearly 20,000, their Bitcoin holdings are worth over $1.6 billion, making them Bitcoin billionaires. Their investment returns exceed 10,000%, making it one of the most successful investment bets in history. The Winklevoss twins' success helps bring Bitcoin to the attention of other wealthy individuals and institutional investors. Their public advocacy for Bitcoin and their work on creating Bitcoin investment products helps legitimize cryptocurrency in the eyes of traditional finance. Their story also demonstrates how some early Bitcoin fortunes were made by people who already had significant wealth and could afford to make large, risky investments. Unlike college students like Eric Finman, who invested small amounts, the Winklevoss twins were able to invest millions of dollars, which allowed them to accumulate truly massive Bitcoin holdings. While individual investors were accumulating Bitcoins, entrepreneurs were building the exchanges and services that made Bitcoin trading possible. One of the most successful early Bitcoin exchange operators is Jesse Powell, who founded Kraken in 2011. Jesse's path to Bitcoin begins with his work in e-commerce and online payments. He's worked for several internet companies and has experience dealing with payment processing challenges. When he first learns about Bitcoin, he immediately understands its potential to solve many of the problems he's encountered in online payments. Jesse starts Kraken as a response to problems he sees with existing Bitcoin exchanges. Gox, the dominant exchange at the time, is slow, unreliable, and has poor customer service. Jesse believes he can build a better exchange that provides faster trading, better security, and more reliable service. Kraken launches in 2013, just as Bitcoin is beginning to gain mainstream attention. The exchange quickly gains market share by offering features that other exchanges lack, including advanced trading tools, better security practices, and support for multiple cryptocurrencies. Jesse's timing is excellent. Bitcoin's price is rising rapidly in 2013, which drives increased trading volume to cryptocurrency exchanges. As one of the more reliable exchanges, Kraken benefits from this increased volume. The company earns money through trading fees, and as trading volume grows, so does Kraken's revenue. But Jesse doesn't just earn money from running an exchange. Like many Bitcoin entrepreneurs, he also accumulates Bitcoins as part of his business operations. Exchange operators often hold significant amounts of cryptocurrency to facilitate trading, and as Bitcoin's price rises, these holdings become extremely valuable. By 2017, Kraken has become one of the largest cryptocurrency exchanges in the world, processing billions of dollars in trading volume. Jesse's stake in the company, combined with his personal Bitcoin holdings, makes him extremely wealthy. Jesse's success with Kraken illustrates another common path to Bitcoin wealth. Many early Bitcoin millionaires made their fortunes not just by holding Bitcoins, but by building the infrastructure that other people used to buy, sell, and trade cryptocurrencies. The exchange business proved to be particularly lucrative because exchanges earn a percentage of every trade, and trading volume grew exponentially as Bitcoin became more popular. Successful exchange operators like Jesse were able to build highly profitable businesses while also accumulating significant amounts of cryptocurrency. Jesse's story also shows how Bitcoin wealth creation often required combining technical expertise with entrepreneurial vision. Simply knowing about Bitcoin wasn't enough to become wealthy. Successful Bitcoin entrepreneurs had to identify problems in the ecosystem and build solutions that other people valued. Another entrepreneur who built significant Bitcoin wealth through infrastructure development is Tony Galippi, who co-founded BitPay, one of the first companies to facilitate Bitcoin payments for merchants. Tony's background is in traditional payment processing. He's worked for several companies that help businesses accept credit card and online payments. When he learns about Bitcoin in 2011, he immediately sees its potential to solve many of the problems that merchants face with traditional payment methods. Credit card processing is expensive for merchants, with fees typically ranging from 2 to 4% of each transaction. Payments can also be reversed through chargebacks, creating additional costs and risks for businesses. Bitcoin payments, by contrast, are nearly free and irreversible, which could save merchants significant money. Tony co-founds BitPay with the goal of making it easy for businesses to accept Bitcoin payments. The company provides payment processing services that allow merchants to accept Bitcoins from customers while receiving traditional currency in their bank accounts. This eliminates the volatility risk that might otherwise prevent businesses from accepting Bitcoin. BitPay launches at an ideal time. Bitcoin is gaining attention from both consumers and businesses, but there are very few easy ways for companies to start accepting Bitcoin payments. BitPay fills this gap by providing enterprise-grade payment processing services designed specifically for Bitcoin. The business grows rapidly as more merchants begin accepting Bitcoin. BitPay signs up thousands of businesses, including major companies like Microsoft, AT&T, and Overstock.com. Each time a customer makes a Bitcoin payment to one of these merchants, BitPay earns a small fee. Like other Bitcoin entrepreneurs, Tony also accumulates Bitcoins through his business operations. BitPay often holds significant amounts of Bitcoin as part of its payment processing activities. As Bitcoin's price rises, these holdings become extremely valuable. Tony's success with BitPay makes him wealthy in multiple ways. His equity stake in the company becomes valuable as BitPay grows into one of the leading Bitcoin payment processors. His personal Bitcoin holdings also appreciate dramatically as Bitcoin's price rises from single digits to thousands of dollars. BitPay's growth also helps drive broader Bitcoin adoption by making it easier for businesses to accept Bitcoin payments. This creates a positive feedback loop where increased merchant acceptance makes Bitcoin more useful for consumers, which drives more demand for Bitcoin and pushes up its price. Tony's story illustrates how Bitcoin wealth creation was often a collaborative process. Individual Bitcoin holders became wealthy as the price rose, but their wealth was partially dependent on entrepreneurs like Tony, who built the infrastructure that made Bitcoin useful and accessible. The symbiotic relationship between Bitcoin holders and Bitcoin entrepreneurs was one of the key factors that drove Bitcoin's early growth. Holders provided the initial demand that gave Bitcoin value, while entrepreneurs built the tools and services that made Bitcoin practical to use. As Bitcoin's price continued to rise through 2013 and 2014, it began attracting attention from more traditional investors and financial institutions. One person who played a crucial role in bringing Bitcoin to Wall Street is Dan Morehead, who founded Pantera Capital, one of the first cryptocurrency hedge funds. Dan's background is in traditional finance. He's worked as a trader and portfolio manager for several major investment firms, including Goldman Sachs and Deutsche Bank. His experience gives him deep knowledge of financial markets and investment strategies. Dan first learns about Bitcoin in 2013 when a colleague shows him an article about the cryptocurrency. His initial reaction is skeptical. Bitcoin seems too volatile and speculative for serious institutional investment. But as he studies Bitcoin more deeply, he begins to understand its potential. Dan realizes that Bitcoin has properties that could make it an excellent investment for certain types of portfolios. It's uncorrelated with traditional assets like stocks and bonds, which means it could provide diversification benefits. It also has the potential for enormous price appreciation if it achieves widespread adoption. In 2013, Dan launches Pantera Capital as a cryptocurrency-focused hedge fund. The fund's strategy is to invest in Bitcoin and other cryptocurrencies, as well as companies building cryptocurrency infrastructure. Dan's goal is to provide institutional investors with professional management of cryptocurrency investments. Pantera Capital starts investing when Bitcoin is trading for a few $100s per coin. The fund buys Bitcoins directly and also invests in cryptocurrency companies. Dan's investment strategy combines traditional portfolio management techniques with deep research into cryptocurrency technology and markets. The fund's performance is exceptional. As Bitcoin's price rises from hundreds of dollars to thousands of dollars, Pantera Capital's investments generate massive returns for its investors. The fund becomes one of the best performing hedge funds in the world during this period. Dan's personal wealth also grows dramatically. As the founder and managing partner of Pantera Capital, he earns management fees and performance fees based on the fund's success. He also makes personal investments in Bitcoin and cryptocurrency companies. Dan's success with Pantera Capital helps legitimize cryptocurrency investing in the eyes of institutional investors. His track record and professional approach demonstrate that cryptocurrency investing can be done with the same rigor and sophistication as traditional asset management. Dan's story also shows how Bitcoin wealth creation expanded beyond individual investors and entrepreneurs to include traditional financial professionals. As Bitcoin matured as an asset class, it created opportunities for people with investment management expertise to build significant businesses and personal wealth. The success of funds like Pantera Capital also helped drive additional investment into the cryptocurrency space. As institutional investors saw the returns that early cryptocurrency funds were generating, they became more interested in allocating capital to cryptocurrency investments. While institutional investors like Dan Morehead were building cryptocurrency investment funds, individual traders were also finding ways to profit from Bitcoin's volatility. One such trader is a person known in the Bitcoin community as Loaded, who becomes famous for making large Bitcoin trades and providing market commentary on online forums. Loaded is one of the early large-scale Bitcoin traders who helps create liquidity in Bitcoin markets. He's known for making trades worth hundreds of thousands of dollars when Bitcoin's total market capitalization is still relatively small. His trading activity helps stabilize Bitcoin's price by providing buyers and sellers when trading volume is low. The exact identity of Loaded isn't publicly known, but his trading history suggests he accumulated a large Bitcoin position very early, possibly in 2009 or 2010. His ability to make large trades without moving the market suggests he holds tens of thousands of Bitcoins. Loaded becomes a legendary figure in the Bitcoin community not just for his trading size, but for his market commentary. He frequently posts on Bitcoin forums, sharing his analysis of market conditions and his predictions for Bitcoin's price. His posts are widely read and often influence other traders' decisions. One of Loaded's most famous trades occurs in 2011 when Bitcoin's price crashes from over $30 under 2. While many people are panicking and selling their Bitcoins, Loaded announces that he's buying aggressively. He posts screenshots showing purchases of thousands of Bitcoins at prices that seem impossibly low in retrospect. His contrarian approach to trading proves extremely profitable. The Bitcoins he buys during the 2011 crash eventually become worth millions of dollars as Bitcoin's price recovers and reaches new highs. His success demonstrates the potential rewards for traders who can remain calm and think independently during periods of market panic. Loaded's story illustrates another path to Bitcoin wealth that some early adopters took. Instead of just buying and holding Bitcoins, they actively traded to try to increase their holdings. This approach was risky and required significant skill, but successful traders could amplify their gains compared to simple buy and hold strategies. The trading approach also provided an important service to the Bitcoin ecosystem by creating market liquidity. Early Bitcoin markets were often thin and volatile, and large traders like Loaded helped smooth out price movements by providing buying and selling pressure at critical moments. However, active trading was also extremely risky. Bitcoin's price movements were often sudden and dramatic, and many traders lost significant amounts of money trying to time the market. Loaded's success was notable partly because so many other early Bitcoin traders lost money despite Bitcoin's overall upward trajectory. As Bitcoin's ecosystem continued to grow, new opportunities for wealth creation emerged beyond just holding Bitcoins or building exchanges. One area that proved particularly lucrative was Bitcoin mining, but at a much larger scale than the early hobbyist miners like Laszlo Hanieks. One entrepreneur who recognized the potential of large-scale Bitcoin mining is Brock Pierce, who co-founded several companies focused on cryptocurrency mining and services. Brock's background is unusual for a Bitcoin entrepreneur. He's a former child actor who appeared in movies like The Mighty Ducks before transitioning into technology and business. Brock becomes involved in Bitcoin around 2013, when the cryptocurrency is beginning to gain mainstream attention. He recognizes that Bitcoin mining is becoming increasingly competitive and that success will require professional operations with significant capital investment. Brock co-founds several Bitcoin-related companies, including a mining operation and a digital currency exchange. His companies raise millions of dollars in investment capital, which they use to purchase specialized mining hardware and build professional mining facilities. The timing of Brock's entry into Bitcoin mining is excellent. Bitcoin's price is rising rapidly, which makes mining more profitable. At the same time, the mining difficulty hasn't yet adjusted to reflect the increased interest in Bitcoin mining, which means there are still opportunities for new miners to be profitable. Brock's companies invest heavily in specialized mining hardware called ASICs, or application-specific integrated circuits. These devices are designed specifically for Bitcoin mining and are much more efficient than the graphics cards that earlier miners like Laszlo used. By deploying ASICs at scale, Brock's operations can mine Bitcoins much more efficiently than smaller competitors. The investment pays off dramatically. As Bitcoin's price continues to rise, Brock's mining operations generate substantial profits. His companies mine thousands of Bitcoins, which become worth millions of dollars as the price appreciates. Brock also earns money from his other Bitcoin-related businesses and his personal Bitcoin investments. Brock's success in Bitcoin mining illustrates how the industry evolved from a hobbyist activity to a professional business. Early miners like Laszlo could be successful using consumer hardware and running operations from their homes. But as Bitcoin became more valuable and competitive, mining success required significant capital investment and professional operations. This evolution created opportunities for entrepreneurs like Brock, who had access to capital and business expertise. They could build large-scale operations that smaller miners couldn't compete with. However, it also meant that mining became less accessible to ordinary individuals. Brock's story also shows how Bitcoin wealth creation often required recognizing and acting on new opportunities as they emerged. The people who became wealthy from Bitcoin weren't just the earliest adopters, but also those who identified new ways to participate in the ecosystem as it evolved. Another entrepreneur who built significant wealth through Bitcoin mining is Marco Streng, who co-founded Genesis Mining, one of the world's largest cryptocurrency mining companies. Marco's approach to mining was different from many other entrepreneurs because he focused on making mining accessible to ordinary investors rather than just running large-scale operations himself. Genesis Mining offers cloud mining services, which allow people to purchase mining contracts without having to buy and operate mining hardware themselves. Customers pay Genesis Mining a fee, and in return, they receive a share of the Bitcoins that the company's mining operations produce. This business model proves extremely popular because it allows people to participate in Bitcoin mining without the technical complexity and capital requirements of running their own mining operations. Genesis Mining signs up thousands of customers and becomes one of the largest mining operations in the world. Marco's success with Genesis Mining makes him wealthy in multiple ways. The company earns money from selling mining contracts to customers, and it also keeps a portion of the Bitcoins that its operations produce. As Bitcoin's price rises, both the company's revenue and its Bitcoin holdings become extremely valuable. Marco's story illustrates another common theme among Bitcoin entrepreneurs. They often made money by making Bitcoin more accessible to ordinary people. Companies like Genesis Mining, BitPay, and Coinbase all succeeded by reducing the technical barriers that prevented mainstream adoption of Bitcoin. This democratization of Bitcoin was important for the cryptocurrency's growth because it expanded the pool of potential users far beyond the technical experts who were Bitcoin's early adopters. As more people gained access to Bitcoin, demand increased, which helped drive up the price and created more wealth for early adopters and entrepreneurs. While entrepreneurs were building Bitcoin infrastructure, other early adopters were taking different approaches to accumulating wealth from cryptocurrency. One unique story is that of Christopher Koch from Norway, whose forgotten Bitcoin purchase made him accidentally wealthy. But there are many other stories of people who became wealthy through unusual or unexpected paths. One such person is James Howells, a British IT worker who accidentally threw away a hard drive containing 7,500 bitcoins. James had been mining bitcoins in 2009 and 2010 using his laptop. He stored his private keys on a hard drive, but when he upgraded his computer in 2013, he accidentally threw the old hard drive in the trash. When James realizes his mistake, Bitcoin is worth over 100 per coin, meaning his lost bitcoins are worth approximately 750,000. He contacts the local landfill and offers to pay for an excavation to try to find the hard drive, but local authorities refuse to allow him to search the landfill due to environmental concerns. James's story becomes international news and serves as a cautionary tale about the importance of properly securing Bitcoin private keys. It also highlights one of the unique aspects of Bitcoin wealth creation. Unlike traditional assets, Bitcoin can be completely lost if the owner loses access to their private keys. James's lost Bitcoins become more valuable over time. By 2017, when Bitcoin reaches nearly 20,000 per coin, his lost hard drive contains Bitcoins worth over 140 million. The story serves as a painful reminder of the importance of properly backing up Bitcoin wallets. James continues to campaign for permission to search the landfill, even offering to donate a portion of any recovered Bitcoins to charity. His story illustrates how some potential Bitcoin fortunes were lost not through bad investment decisions, but through accidents or technical mistakes. The phenomenon of lost Bitcoins is significant in the context of Bitcoin wealth creation. Estimates suggest that millions of Bitcoins have been permanently lost due to forgotten passwords, lost hard drives, and other mistakes. This effectively reduces the supply of available Bitcoins, which may contribute to price appreciation for Bitcoins that remain accessible. Another unusual Bitcoin wealth story involves Ross Ulbricht, the creator of Silk Road, the online marketplace that allowed people to buy illegal drugs using Bitcoin. Ross's story is controversial and ultimately tragic, but it illustrates how Bitcoin's early growth was partly driven by its use for activities that weren't possible with traditional payment methods. Ross creates Silk Road in 2011 as part of his libertarian belief in free markets and individual liberty. The marketplace uses Tor software to hide users' identities and Bitcoin to facilitate payments. Because Bitcoin transactions don't require traditional banking infrastructure, they're difficult for authorities to trace or block. Silk Road becomes enormously popular, processing millions of dollars in transactions and taking a commission on each sale. Ross accumulates large amounts of Bitcoin through these commissions, reportedly holding over 140,000 Bitcoins at the peak of Silk Road's operations. In 2013, the FBI shuts down Silk Road and arrests Ross. They seize approximately 144,000 Bitcoins from various Silk Road-related accounts. Ross is eventually convicted of running a continuing criminal enterprise and is sentenced to life in prison without parole. Ross's story is tragic because he becomes one of the first Bitcoin millionaires but loses his freedom in the process. His case also illustrates the legal risks that some early Bitcoin adopters faced due to the cryptocurrency's association with illegal activities. The Bitcoins seized from Silk Road are eventually auctioned by the US government, creating another opportunity for wealthy investors to acquire large amounts of Bitcoin. One of the biggest buyers at these auctions is Tim Draper, a venture capitalist who purchases approximately 30,000 Bitcoins for about $19 million. Tim Draper's Bitcoin purchases at the government auctions prove to be extremely well-timed. He buys Bitcoins for approximately $600 each, and by 2017, they're worth nearly $20,000 each. His investment returns exceed 3,000%, making him one of the most successful Bitcoin investors. Tim's success at the government auctions also illustrates how Bitcoin wealth creation continued to evolve as the ecosystem matured. Early adopters could buy Bitcoins directly from exchanges or earn them through mining, but later investors had access to new opportunities like government auctions and institutional investment products. The government's Bitcoin auctions also helped legitimize Bitcoin by demonstrating that even law enforcement agencies recognized Bitcoin's value. The fact that the government was selling Bitcoins rather than destroying them sent a signal to the market that Bitcoin was viewed as a legitimate asset. As Bitcoin's price continued to rise through 2016 and 2017, reaching new all-time highs, many early adopters who had held onto their Bitcoins found themselves with life-changing wealth. One such person is Da Vinci Jeremy, a Chilean YouTuber who made videos encouraging people to buy Bitcoin when it was worth less than one. Da Vinci creates YouTube videos in 2013 explaining Bitcoin and urging viewers to buy at least 1,000 worth of Bitcoin. His videos are prescient, accurately predicting that Bitcoin's price will rise dramatically over time. He tells viewers that even a small investment could become life-changing if Bitcoin succeeds. Da Vinci's own Bitcoin holdings, accumulated when Bitcoin was worth less than 10, eventually become worth millions of dollars. His story becomes famous on social media as an example of someone who correctly predicted Bitcoin's rise and benefited from his own advice. Da Vinci's story illustrates how some Bitcoin wealth was created by people who served as early evangelists for the cryptocurrency. These individuals often accumulated Bitcoins not primarily as an investment, but because they genuinely believed in Bitcoin's potential to change the world. Their wealth was partly a reward for the risk they took in promoting an unproven technology when most people were skeptical. Their advocacy helped increase awareness and adoption of Bitcoin, which contributed to its price appreciation. Another early Bitcoin evangelist who became wealthy is Andreas Antonopoulos, although his path to wealth was more indirect than many other early adopters. Andreas is a technologist and author who becomes one of Bitcoin's most prominent educators and advocates. Andreas starts giving talks about Bitcoin in 2012, when the cryptocurrency is still largely unknown outside of technical circles. His presentations explain Bitcoin's technology in accessible terms and help many people understand Bitcoin's potential for the first time. Andreas writes several books about Bitcoin and blockchain technology, including Mastering Bitcoin, which becomes one of the most widely read technical guides to Bitcoin. He also gives hundreds of talks at conferences around the world and creates educational content online. Initially, Andreas doesn't accumulate large amounts of Bitcoin despite his early involvement and deep knowledge of the technology. He focuses more on education and advocacy than on investment, and he often spends the Bitcoins he receives for speaking engagements rather than holding them. However, Andreas's reputation as a Bitcoin expert eventually creates significant earning opportunities. He receives donations from the Bitcoin community, earns money from book sales and speaking engagements, and eventually receives large Bitcoin donations from grateful community members who appreciate his educational work. Andreas's story shows how Bitcoin wealth creation wasn't limited to investors and entrepreneurs. People who contributed to Bitcoin's growth through education, advocacy, and technical development could also build significant wealth, even if their primary motivation wasn't financial. His experience also illustrates the importance of the Bitcoin community in supporting people who contributed to the ecosystem's growth. The fact that community members donated significant amounts of Bitcoin to Andreas demonstrates how the early Bitcoin community valued education and advocacy. As Bitcoin's price reached new heights in 2017, approaching 20,000 per coin, the stories of early Bitcoin millionaires began attracting mainstream media attention. These stories captured the public imagination because they represented a new form of wealth creation that seemed almost magical to outside observers. The idea that someone could become a millionaire by buying strange digital tokens for a few dollars seemed to defy common sense about how wealth is created. Traditional paths to wealth typically involve building businesses, investing in established assets, or earning high salaries over many years. Bitcoin wealth could be created much more quickly and with much smaller initial investments. This attracted new investors to Bitcoin, but it also created unrealistic expectations about cryptocurrency investing. Many people who entered the Bitcoin market in 2017 expected to achieve the same returns as early adopters, not realizing that the early adopters had taken enormous risks when Bitcoin's success was far from certain. The stories of early Bitcoin millionaires also highlighted the importance of timing in investment success. People who bought Bitcoin in 2009 or 2010 could achieve returns of over 100%, while people who bought in 2017 often lost money as Bitcoin's price subsequently declined. However, the early Bitcoin millionaires' success wasn't just about timing. It also required the conviction to hold onto a volatile and speculative asset through multiple crashes and periods of intense skepticism. Many early Bitcoin buyers sold their holdings long before they became truly valuable. The psychological challenge of holding Bitcoin through its volatile periods cannot be understated. Bitcoin's price often declined by 80% or more during bear markets, and these declines could happen very quickly. Maintaining conviction during these periods required either enormous faith in Bitcoin's long-term potential or the ability to ignore short-term price movements entirely. Many early Bitcoin millionaires credit their success to having a long-term perspective and focusing on Bitcoin's fundamental properties rather than its daily price movements. They viewed Bitcoin as a revolutionary technology rather than just a speculative investment, which helped them maintain conviction during difficult periods. The early Bitcoin community also provided important emotional support during these volatile periods. Online forums and meetups allowed Bitcoin holders to share their experiences and reinforce each other's conviction. This community aspect was crucial for many people's ability to hold their Bitcoins through multiple market cycles. As Bitcoin's ecosystem continued to mature, new categories of Bitcoin businesses emerged, creating additional opportunities for wealth creation. One area that proved particularly lucrative was cryptocurrency exchanges, but with a focus on serving institutional rather than retail customers. Mike Novogratz represents this evolution in Bitcoin wealth creation. Mike's background is in traditional finance, where he worked as a trader and portfolio manager at Goldman Sachs and Fortress Investment Group. His experience managing large investment portfolios gives him insights into what institutional investors need from cryptocurrency markets. Mike starts investing in Bitcoin and other cryptocurrencies in 2013, initially through personal investments and later through dedicated cryptocurrency funds. His investment thesis is that cryptocurrencies represent a new asset class that will eventually attract hundreds of billions of dollars from institutional investors. Mike's investment approach is different from many early Bitcoin adopters. Instead of just buying and holding Bitcoin, he builds a diversified cryptocurrency portfolio that includes investments in Bitcoin, other cryptocurrencies, and cryptocurrency companies. His goal is to profit from the growth of the entire cryptocurrency ecosystem rather than just Bitcoin's price appreciation. Mike also becomes an active advocate for cryptocurrency adoption by institutional investors. He gives interviews and presentations explaining why he believes cryptocurrencies belong in professional investment portfolios. His reputation and track record in traditional finance give him credibility with institutional investors who might otherwise be skeptical of cryptocurrency. In 2018, Mike launches Galaxy Digital, a cryptocurrency investment bank that provides services to institutional investors. The company offers cryptocurrency trading, asset management, and investment banking services designed specifically for professional investors. Mike's wealth comes from multiple sources: his personal cryptocurrency investments, his stake in Galaxy Digital, and the fees his company earns from providing services to other investors. His success illustrates how Bitcoin wealth creation evolved to include sophisticated financial services as the market matured. Mike's story also shows how traditional finance professionals who understood both cryptocurrency technology and institutional investor needs could build significant businesses and wealth. His success required combining deep knowledge of cryptocurrency markets with expertise in traditional financial services. Another entrepreneur who built wealth by serving institutional cryptocurrency investors is Matthew Roszak, who co-founded Block, a blockchain technology company, and Tally Capital, a cryptocurrency investment firm. Matthew's approach to cryptocurrency wealth creation is similar to Mike Novogratz's in that it focuses on building businesses that serve the growing cryptocurrency ecosystem, rather than just holding cryptocurrency directly. His companies provide technology and investment services to other cryptocurrency businesses and investors. Block develops blockchain software and provides consulting services to companies that want to implement blockchain technology. Tally Capital makes investments in cryptocurrency and blockchain companies. Both businesses benefit from the growing interest in cryptocurrency and blockchain technology among enterprises and investors. Matthew's wealth comes from his equity stakes in these companies as well as his personal cryptocurrency investments. His success illustrates another evolution in Bitcoin wealth creation as the cryptocurrency ecosystem became more complex. There were opportunities to build valuable businesses by providing specialized services to other participants in the ecosystem. The stories of entrepreneurs like Mike Novogratz and Matthew Roszak also highlight how Bitcoin wealth creation became more institutionalized over time. Early Bitcoin fortunes were often made by individuals acting alone, But later opportunities increasingly required building teams and companies with significant capital and expertise. This evolution reflected Bitcoin's growing mainstream acceptance and the increasing sophistication of cryptocurrency markets. As Bitcoin became a more established asset class, it created opportunities for traditional business models like investment banking and enterprise software adapted for the cryptocurrency market. As Bitcoin's price reached its peak near $20,000 in late 2017, many early Bitcoin millionaires faced a new challenge, deciding whether to sell their holdings and lock in their gains, or continue holding in the belief that Bitcoin's price would continue rising. This decision was particularly difficult because many early Bitcoin adopters had held their Bitcoins through multiple previous price cycles. They had seen Bitcoin crash from over $30,000 to under $2,000 in 2011, then rise to over $1,000 in 2013, then crash again to under $200 in 2015. Each time, the people who held through the crash were rewarded when Bitcoin reached new highs. However, the 2017 peak was different because Bitcoin had gained mainstream attention and media coverage. Many early adopters worried that this level of attention and speculation was unsustainable and that a major crash was inevitable. Some early Bitcoin millionaires chose to sell significant portions of their holdings near the 2017 peak. These sales allowed them to lock in life-changing wealth and reduce their exposure to Bitcoin's volatility. However, they also meant giving up the potential for additional gains if Bitcoin continued to rise. Others chose to continue holding most of their Bitcoins, believing that Bitcoin's long-term potential remained intact despite short-term speculation. These holders were betting that Bitcoin would eventually reach much higher prices as it achieved broader adoption. The decision of whether to sell was complicated by tax considerations. In many jurisdictions, selling Bitcoins triggered significant capital gains taxes, which could consume a large portion of the gains. This created an incentive to hold Bitcoins rather than sell them, even for people who wanted to reduce their exposure. The aftermath of the 2017 peak vindicated both strategies to some extent. Bitcoin's price crashed to around $3,200 in late 2018, which meant that people who sold near the peak avoided significant losses. However, Bitcoin later recovered and reached new all-time highs above $60,000 in 2021, which meant that long-term holders eventually saw even greater gains. The experience of the 2017 peak and subsequent crash also created a new category of Bitcoin wealth stories. People who became millionaires during the 2017 bull run, but then lost most of their wealth during the subsequent crash because they didn't sell at the peak. These stories serve as cautionary tales about the importance of risk management in cryptocurrency investing. Even early adopters who had enormous paper gains could lose most of their wealth if they didn't manage their risk appropriately. The volatility of Bitcoin wealth also had psychological effects on early adopters. Many people who became millionaires on paper during Bitcoin's rise experienced significant stress and anxiety about their wealth. The rapid changes in net worth could be emotionally difficult to handle, particularly for people who weren't accustomed to having significant wealth. Some early Bitcoin millionaires reported that their Bitcoin wealth changed their relationships with friends and family. People who knew about their Bitcoin holdings often approached them for investment advice or financial help, which created social complications. The sudden wealth also created lifestyle decisions that many early Bitcoin adopters weren't prepared for. People who had been living modestly suddenly had access to millions of dollars, but they weren't sure how to manage or spend their wealth responsibly. These psychological and social challenges of Bitcoin wealth highlight an often overlooked aspect of the early Bitcoin millionaire stories. While the financial gains were enormous, they also came with personal costs and complications that many people didn't anticipate. Despite these challenges, most early Bitcoin millionaires express gratitude for their experience and continue to believe in Bitcoin's long-term potential. Many of them use their wealth to support Bitcoin development, fund Bitcoin-related businesses, or advocate for cryptocurrency adoption. Their stories also serve as inspiration for later cryptocurrency investors, demonstrating that it's possible to achieve extraordinary investment returns by identifying and investing in revolutionary technologies before they become mainstream. The legacy of the first Bitcoin millionaires extends beyond their personal wealth. Their early adoption and advocacy helped establish Bitcoin as a legitimate asset class and paved the way for broader cryptocurrency adoption. Many of them became leaders in the cryptocurrency industry, using their wealth and experience to build new businesses and invest in the next generation of cryptocurrency entrepreneurs. Their success stories helped attract additional investment and talent to the cryptocurrency space. The first Bitcoin millionaires also demonstrated the potential for decentralized technologies to create new forms of value and wealth distribution. Unlike traditional assets, which are often controlled by centralized institutions, Bitcoin allowed ordinary individuals to participate directly in a new form of money from its earliest days. This democratization of access to a revolutionary technology is one of the most important legacies of the early Bitcoin adoption period. People from diverse backgrounds, education levels, and geographic locations could participate equally in Bitcoin's growth, purely based on their willingness to research the technology and take risks. The stories of early Bitcoin millionaires continue to evolve as Bitcoin and the broader cryptocurrency ecosystem develop. Many of the people who became wealthy from early Bitcoin adoption have gone on to build significant businesses, make important technological contributions, and influence the direction of the cryptocurrency industry. Their experiences during Bitcoin's early years provided them with unique insights into how revolutionary technologies develop and gain adoption. This knowledge has proven valuable as they evaluate new opportunities in cryptocurrency and blockchain technology. Some early Bitcoin millionaires have also become philanthropists, using their Bitcoin wealth to fund charitable causes and social impact projects. The programmable nature of cryptocurrencies has enabled new forms of charitable, giving and social impact measurement. The environmental and social impact of Bitcoin mining has also become a significant concern for some early Bitcoin adopters. As Bitcoin's energy consumption has grown, some wealthy Bitcoin holders have invested in renewable energy projects and carbon offset programs to address these concerns. The regulatory evolution of Bitcoin has been another major theme in the ongoing stories of early Bitcoin millionaires. Many of them have worked with regulators and policymakers to develop appropriate frameworks for cryptocurrency regulation that protect consumers while preserving innovation. The global nature of Bitcoin has also meant that early Bitcoin millionaires come from many different countries and jurisdictions. This has created a diverse community of wealthy individuals who share common experiences despite having different cultural and legal backgrounds. The continuing development of Bitcoin technology, including improvements like the Lightning Network for faster payments, has created new opportunities for early Bitcoin adopters to contribute to Bitcoin's evolution. Many wealthy Bitcoin holders fund research and development projects aimed at improving Bitcoin's functionality. The emergence of other cryptocurrencies and blockchain platforms has also created new investment and business opportunities for people who became wealthy from early Bitcoin adoption. Many Bitcoin millionaires have diversified into other cryptocurrency investments and blockchain-related businesses. The institutional adoption of Bitcoin by companies like Tesla and MicroStrategy has validated many of the predictions that early Bitcoin adopters made about Bitcoin's potential as a store of value. This adoption has also created new opportunities for Bitcoin-related businesses and services. The development of Bitcoin ETFs and other traditional financial products that provide exposure to Bitcoin has made it easier for institutional and retail investors to gain Bitcoin exposure without directly holding the cryptocurrency. This has expanded the potential market for Bitcoin and created new business opportunities. The ongoing evolution of Bitcoin and cryptocurrency markets means that the stories of early Bitcoin millionaires continue to develop. Their experiences during Bitcoin's early years positioned them well to understand and capitalize on new developments in the cryptocurrency space. Many early Bitcoin adopters view their wealth as carrying responsibility to support Bitcoin's continued development and adoption. They fund development projects, support educational initiatives, and advocate for policies that promote cryptocurrency innovation. The international nature of Bitcoin has also enabled early Bitcoin millionaires to have global impact. Because Bitcoin operates across borders, wealthy Bitcoin holders can support projects and causes worldwide without the restrictions that traditional financial systems might impose. The programmable nature of Bitcoin and other cryptocurrencies has also enabled new forms of automated charitable giving and impact measurement. Some Bitcoin millionaires have created smart contracts that automatically distribute funds based on predetermined criteria. The privacy features of some cryptocurrencies have also enabled wealthy individuals to make anonymous donations and support causes without public recognition. This has allowed some Bitcoin millionaires to support controversial or politically sensitive causes without personal risk. The continuing development of decentralized finance, or DeFi, has created new opportunities for Bitcoin wealth to generate additional returns through lending, staking, and other financial services. However, these opportunities also come with new risks that early Bitcoin adopters must carefully evaluate. The emergence of non-fungible tokens, or NFTs, has created another new category of digital assets that some Bitcoin millionaires have invested in. The intersection of Bitcoin wealth and digital art and collectibles has created new markets and opportunities. The development of central bank digital currencies, or CBDCs, by governments around the world has created new competitive dynamics for Bitcoin. Early Bitcoin adopters are watching these developments closely and positioning themselves for various potential outcomes. The ongoing evolution of quantum computing technology poses potential long-term risks to Bitcoin's security model. Some wealthy Bitcoin holders are funding research into quantum-resistant cryptography to address these future threats. Climate change concerns related to Bitcoin mining have led some Bitcoin millionaires to invest in renewable energy projects and more efficient mining technologies. The intersection of Bitcoin wealth and environmental sustainability continues to evolve. The geopolitical implications of Bitcoin adoption by nation-states, as seen with El Salvador's adoption of Bitcoin as legal tender, have created new opportunities and risks for Bitcoin holders. Early Bitcoin millionaires are closely watching these developments. The continuing maturation of cryptocurrency regulation in major jurisdictions is creating more clarity about the long-term legal status of Bitcoin. This regulatory clarity is enabling new business models and investment strategies for Bitcoin millionaires. The development of improved user interfaces and educational resources has made Bitcoin more accessible to mainstream users. Many early Bitcoin adopters support these efforts because broader adoption benefits all Bitcoin holders. The integration of Bitcoin into traditional financial services, including banks and payment processors, has created new opportunities for Bitcoin-related businesses. Early Bitcoin millionaires are often investors in or founders of these businesses. The continuing improvement of Bitcoin scalability through technologies like the Lightning Network is addressing one of the main technical challenges that could limit Bitcoin's growth. Many Bitcoin millionaires support development of these scaling solutions. The emergence of Bitcoin as a treasury asset for corporations has created new sources of demand that could drive long-term price appreciation. Early Bitcoin adopters who continue to hold their Bitcoins benefit from this institutional adoption. The development of more sophisticated cryptocurrency trading and investment tools has created new opportunities for active management of Bitcoin wealth. Some early Bitcoin millionaires have become professional cryptocurrency investors and fund managers. The continuing globalization of cryptocurrency markets has created opportunities for early Bitcoin adopters to participate in new markets and regions where cryptocurrency adoption is growing rapidly. The stories of the first Bitcoin millionaires represent more than just individual success stories. They illustrate how revolutionary technologies can create new forms of wealth and opportunity for people who are willing to take risks and think independently. These early adopters faced enormous uncertainty and skepticism when they first invested in Bitcoin. The technology was unproven, the legal status was unclear, and most experts believed that digital currencies couldn't work. Their success required a combination of technical understanding, risk tolerance, and conviction that most people lacked. Their stories also demonstrate the importance of community and collaboration in the development of new technologies. The early Bitcoin community provided crucial support, feedback, and development resources that helped Bitcoin succeed. Many individual Bitcoin millionaires became wealthy partly because of the collective efforts of this community. The diversity of paths to Bitcoin wealth, from miners to traders to entrepreneurs to investors, shows how revolutionary technologies can create opportunities for people with different skills and interests. There wasn't just one way to become a Bitcoin millionaire. There were dozens of different strategies that people successfully employed. The timing of early Bitcoin adoption was crucial, but it wasn't everything. Many people who learned about Bitcoin in its early years chose not to invest or sold their holdings too early. The people who became millionaires were distinguished not just by their early knowledge, but by their willingness to act on that knowledge and maintain conviction through difficult periods. The psychological challenges of holding volatile assets like Bitcoin were as important as the technical and financial aspects. Many potential Bitcoin millionaires lost their nerve during crashes and sold their holdings at significant losses. The successful early adopters developed emotional discipline and long-term perspective that served them well. The global and decentralized nature of Bitcoin meant that early adopters came from many different backgrounds and locations. Unlike many traditional investment opportunities that favor people with existing wealth and connections, Bitcoin was accessible to anyone with internet access and the willingness to learn about the technology. The open-source nature of Bitcoin also meant that anyone could contribute to its development and potentially benefit from its success. Many Bitcoin millionaires started as volunteers who contributed code, documentation, or other resources to the project. The stories of early Bitcoin millionaires continue to evolve as the cryptocurrency ecosystem develops and matures. Their early experiences with Bitcoin have positioned many of them to identify and capitalize on new opportunities in cryptocurrency and blockchain technology. Their wealth has also given them the resources to influence Bitcoin's development and the broader cryptocurrency ecosystem. Many early Bitcoin millionaires have become investors, entrepreneurs, and advocates who shape the direction of cryptocurrency adoption. The legacy of the first Bitcoin millionaires extends far beyond their personal wealth. They helped establish cryptocurrency as a new asset class, demonstrated the potential for decentralized technologies to create value, and inspired millions of people around the world to learn about and invest in cryptocurrency. As Bitcoin continues to evolve and gain adoption, the stories of its first millionaires serve as both inspiration and cautionary tales for new participants in the cryptocurrency ecosystem. Their experiences provide valuable lessons about the opportunities and risks of investing in revolutionary technologies. The untold story of the first Bitcoin millionaires is ultimately a story about vision, courage, and the power of decentralized technologies to create new forms of value and opportunity. These early adopters saw the potential of Bitcoin when most people saw only risk and uncertainty, and their conviction was rewarded with extraordinary wealth. But their story is also about community, collaboration, and the importance of building the infrastructure and ecosystem that makes revolutionary technologies useful and accessible. The individual success of Bitcoin millionaires was enabled by the collective efforts of thousands of developers, entrepreneurs, and advocates who believed in Bitcoin's potential. As we look toward the future of Bitcoin and cryptocurrency, the experiences of the first Bitcoin millionaires provide valuable insights into how new technologies develop and gain adoption. Their stories remind us that extraordinary opportunities often arise from revolutionary technologies that initially seem risky or speculative. The first Bitcoin millionaires took enormous risks when they chose to invest in an unproven technology created by an anonymous person. Their success validates the potential rewards of independent thinking and conviction in the face of widespread skepticism. Their stories also highlight the importance of education and understanding when investing in new technologies. The most successful early Bitcoin adopters were those who took the time to understand how Bitcoin worked and why it represented a significant innovation. The continuing evolution of Bitcoin and the broader cryptocurrency ecosystem means that new opportunities for wealth creation continue to emerge. While it may no longer be possible to achieve the same percentage returns as the very first Bitcoin adopters, the principles that guided their success remain relevant for future cryptocurrency investors. The decentralized and global nature of cryptocurrency means that opportunities for participation remain accessible to people worldwide. The next generation of cryptocurrency innovations may create new paths to wealth that we can't yet imagine. The stories of the first Bitcoin millionaires serve as a testament to the power of revolutionary technologies to change not just individual lives, but entire economic systems. Their early adoption of Bitcoin helped establish cryptocurrency as a new asset class that has grown to a multi-trillion-dollar market. As Bitcoin continues to mature and gain institutional adoption, the pioneering efforts of its first millionaires become increasingly valuable. Their early investments and advocacy helped create the foundation for Bitcoin's current success and future potential. The untold story of the first Bitcoin millionaires is ultimately a story about the future being built by people who were willing to bet on revolutionary change when others saw only uncertainty. Their courage and conviction helped create a new form of money that has the potential to benefit millions of people worldwide.